Okay, welcome everyone. We're going to get right into the stock market technical analysis. We're going to just take a look at the markets. We obviously had the Fed. Powell was talking today, and we'll go through that. Look at any trade ideas that I'm seeing, and I'm going to give you guys my general read on the market. So if you guys are finding value in the content, drop me a thumbs up. If you're interested in learning this as a skill set, learning how to read the charts, learning how to find high probability setups, no guarantees, of course. No setups are going to be a guaranteed. There's always risk. But also, I do help teach how to manage risk. So that's in my stock market technical analysis course. Link in the description below. Priced affordable, attainable for all. And in general, it's just clean, general clean knowledge that I'm, basically handing out, giving out for, for that fee. So check it out if you're interested. All right, guys, let's drop into the market. So we've got, obviously, Powell came out, and that's what I had been talking about pretty much for the last week. Really about the last week is the fact that I was a little unsure on where the market looked like it wanted to go. And with the Fed and Powell coming out today, it just didn't seem to make a lot of sense to take a lot of risk on. So I was not really heavily short any positions. Had a couple starter positions and some shorts, but those were mixed with some longs. So we'll go through those and kind of what I've been talking about. Now that Powell's out of the way, we saw this big move up in triple Qs. Now, triple Qs is rallying up to there's some resistance here. You can see we've got some reactions here. There's one, there's another. So a couple reactions. So we've got some resistance, but the market triple Qs especially, might want to do a little bit more of a rally. So if I go down to the daily, you'll see here on the daily, the downtrend line, which has been kind of the target I've been looking at for a short entry on triple Qs, isn't too far away now after this pretty strong move. A little bit more, another 4% or so, and we'll be up there. So that would make sense if we could get up there and hit that as the an objective area to short. Okay. Now, obviously, if we get up there, we'll need to see what the charts look like. But it is objective. It is a downtrend line on the daily chart. There's your resistance. I've got it marked out, and so that would be the major trend. And the major trend is a bear market. So we want to play the major trend. If we rally into resistance, we want to sell the rip, and it's right up there. So another 4% up or so on triple Qs. Do we get there now? With the move today, I think it's definitely more probable, I would say, more likely that we get up there. We don't have to, but it's a strong move today. We still haven't broke out of this resistance level right there, so I need to see 291. You can see in the past, when we hit it before, boom, we got rejected. We're just right back there. So a break above that, and yeah, you're probably going to go up there and hit that trend line, maybe overshoot it a little, chop through it, but I think that'll be the topping action up there if we get up there. So that's what I see on triple Qs. IWM, you'll see what's going on here. There's no technical change in IWM, and that's why I think maybe we could trade around, kind of grind around a little more in IWM while triple Qs runs up and maybe hits that resistance line. But on small caps, this is your all-time high in IWM, and you can see resistance, resistance, resistance here, and sure enough, we're just trading right into resistance. So it's actually objective to short here. And yeah, that's really what I see. And then also, if you look at the hourly chart, a couple things going on. This was an uptrend line. So look, you got support, kind of hit it through here, a little chop through here, but then we had lots more reactions on that support. We finally broke that support line. And today it's really just like a back test basically. So it's objective to short right up in here. I might take a starter short on this IWM here. And again, I'm playing the major trend. If I go to the daily chart, the major trend is down. We're at trend line resistance, okay? Additionally, let me just make sure we got some divergences in play. We do. If I go to the hourly, they're a little more obvious, but right there, okay, you can see that basically this high right up in here, this cluster, was a lower high than before. We haven't made a new high, so maybe it wants to run up and make a new high up to 189, about 190. I think we could maybe pop up there. hit that resistance level, put in a new divergent high, make everyone think the bear market is over because we broke the trend line and then fail. Something to look at there. All right, and there's also that's a key level of resistance. You got this was support through here. You can see it was resistance through here. A couple reactions through there. There's another reaction. Okay, so that would for me would be the probably a key area to probably start shorting. You could maybe take a starter position at this downtrend line, add right here. I don't know if I'd really add too much more above that. We start to run above it and start to hold and close above it. We'll probably want to actually start looking for areas to stop out of the trade, okay? And the S&P 500, again, on the daily chart, the major trend on the bear market is here, all right? You can see resistance through there. And sure enough, nothing's technically changed. I mean, we are just rallying. Right now, we're rallying to the 200. I think we're probably going to pop up and hit this as resistance. We're in the zone of resistance. So in general, even though today in the last second half of the day feels extremely bullish, that doesn't mean that you're going to trend higher and go on and to make all-time new highs and enter a bull market. And in fact, some of the best times to short are on rallies into major resistance, big impulsive rallies into resistance, all right? And that's what we have so far today. I think maybe we go a little bit higher. So I'm kind of giving it a little room. I'm not really starting to take on too many shorts, but I am starting to think about establishing swing trend shorts for the next leg lower, all right? But again, I'd like to see us kind of hit these trend lines and maybe get a little bit higher. That's what I got on that one. And then if I look at the day or the hourly chart, the high today, still a divergent high as of right now. You'll see here on the momentum, there's your PPO and the RSI, still making that divergent high. So we still have that negative divergence on the hourly, and we're in a zone of resistance. Again, looks like an area where it's pretty objective to start shorting, at least in my opinion. I took a starter short today on XLF. I did do it right before the Fed, so obviously that's underwater a little bit. But it's okay because technically nothing's really changed. And it's a starter short. I'm not really looking to add right now. I just kind of want to see how the market settles over the next few days. But on XLF, the thing I like about it is, look, on the daily chart, we made a new high. Here's your high right in here from kind of your former high. And look, negative divergence on the daily. All right, that has not changed. When I go down to the hourly, even on the hourly, the high that we're making right now is just this little spike above here on this high. It's a divergent high. All right, so I think this is going to get sold into this rally. That's what it looks like to me. Also on the hourly, you can see we had some support right here, couple tags, couple reactions right through here. We broke, all right? We're back testing right now, making a new divergent high. So again, it looks like a decent short, although not working right away. But again, you can't expect your trades to just work instantly. Typically, you have to let them develop. We want to get positioned in the key area and then let the trade start to develop. And that's kind of what I'm seeing. So I'm not looking to add yet, but I'm not going to let it go. Still short. I have a starter short on this. Okay, gold. So gold futures. Let me kind of clean this chart up real quick. One second. All right, that's better. So on gold futures, basically, again, I'm continuing to be a dip buyer of gold and gold miners, okay? Your downtrend line on this daily chart, starting back in March of 22. All right, there it is. Breakout, come in, hit first level support, and rallying. So it's a buy the dip. We're in buy the dip mode on this, and the chart continues to reinforce that. So looking for more upside in gold. And, we got a little resistance right here. It's about, let me stretch that out. Right there, the 200 moving average, about 1800, 1807. Little level of resistance, but I am thinking we, continue higher. So, and I'm seeing signs like here's one PAAS. Again, you got this downtrend line right here on the daily. There's resistance, okay? You had this bullish falling wedge pattern that really started to play out. And boom, breakout. And that's a pretty convincing breakout to me, especially, it really broke out the other day, but then they did this little whipsaw failure, but boom, snapped it right back. And it's pretty convincing, up 7% today. That's a breakout. So breakout buy signal, I'm long this one. and it's looking good. First level of resistance is right up here at 1679, so we'll probably hit that, consolidate for a little bit, and then continue higher. All right, First Solar. So this one, obviously rallying with the market, rallying right into resistance. I did adjust my wedge trend line because I had it drawn where we basically had a breakdown yesterday, something like that. Looked okay, but today they broke down and it's recovering. So now I got to kind of adjust it, and that's just how the charts change. So you have to change your trend line sometimes. And so I'm going to have it like that one now. So now we're waiting for a break of that. We're rallying into resistance. Negative divergence still remains. Nothing's changed here. It's very similar to a lot of the other charts. Still have that negative divergence. Rallying into resistance should be the end of the rally, but again, we've just been kind of grinding higher within this wedge, looking for this to break. We'll see. I'm not going to give it too much more room on this, as a short trade. I'm staying with it for now. We'll see how the rest of the week kind of settles down. But I'm probably going to hold this into the Fed meeting. I think they come out next Wednesday, and then we'll see and reevaluate this. Okay, commodities. So I've talked about some of these commodities and how commodities kind of looks like a whack-a-mole where some are going up, some are going down. However, with the market today and the Fed meeting, or the Fed speech from Powell, the market's kind of pricing in a Fed pivot basically. And so we're seeing commodities rally across the board, gold rally, the dollar falling down, and tech stocks especially rallying. And that's so far so good. Here's this one, BAL. I've talked about that one being a decent long, up 5.5%, continuing to look like it's moving higher basically. Joe continues to rally. All right, that one's up another percent. So all good on the long front on that one. Just continuing to march towards our targets. And then the other one, wheat looks okay. Wheat's not the best looking, but we'll see. It's still rallying today. We've got a little bit of a trend line maybe to watch on that one, which is about right there. Not that great, but you do have, wheat's okay. I mean, it still looks bullish. You do have some bullish divergence showing up on the hourly here, and it is there on the RSI. So look for continued upside in wheat. This one was a kind of a short setup, but again, the other day I talked about how we were trading right at that trendline support right there, and it just didn't really make sense to stay short as there was no breakdown. So we were looking for a continued breakdown, didn't get it, and it just stayed there. I covered that short trade right there for small profit basically, and no breakdown yet. So on this one, here's your downtrend line, all right? And that's your bear market. We're rallying above it right now. Still a divergent high. We're making a new divergent high now. So after this speech and the pump that we've seen today, I would expect if this is going to break down, it to do it fairly soon, okay? So the next time we see this thing back below, really the lows, you take out the lows here at 208.14, that's probably going to be our sell signal, all right? So somewhere right in there is likely going to trigger more selling and the end of this rally. So that's what I see on that one. The other way to kind of take it is, this is a breakout. It's definitely a big breakout candle for sure. I mean, that's a decent candle, but it does have negative divergence still. So let's look at the PPO real quick. It's still there. It's just barely there, but so we have negative divergence. So if the divergence remains intact, the negative divergence, then sure enough, we're probably going to get that false breakdown and continued more, we're going to get a false breakout and more downside. If it continues to rally and we burn through the divergence, that's going to be pretty bullish. So we'll want to keep an eye on that and see if that starts to develop. Okay, I don't think I'm forgetting anything. I kind of pointed out what's showing up in the charts as of right now. So we might start positioning for the next leg lower in the bear market on some of these indices. I'm looking for maybe a little more upside and start to build those positions over time. I don't want to take the position all at once. I want to kind of add as we start to hit some of these resistance levels, start to add, and then maybe add when the trade starts to work out. So that's what I got right now. Not short, not long right now. not long on the triple Qs or anything, but not short as well. Just flat on that one for right now. Okay, I'll get the video out there. Drop me a thumbs up on the way out, guys. I'll see you on the next one. Bye.